my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a major lender that's cutting mortgage rates tomorrow, April the 1st. It's not an April Fool's joke, it's very real. And they're also extending the time that people can take to complete the deal. So once you've got a mortgage offer out from them, you've got your rate secured, they're giving you longer to do that. So I'm going to talk about why that's also happening right now as well. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 40,000 subscribers. Have a look around this video. We're very close. We need about 500 more, so do help us get there a little faster. And let's get some more views on this video so people know what's going on in the market. How can we do that? Smash like, tickle like, do something to the like button. That helps with YouTube's algorithm. And then share the video, WhatsApp it, email it, or Facebook message it to someone as well. So, rates are coming down at the moment, and it's not due to the Bank of England cutting rates. It's not due to inflation dropping. It's due to the fact that the market has started to slow down. So what does that mean? Well, the first 3 months of the year, January, February and March, there was a lot of activity. Everyone was trying to beat that stamp duty increase. In fact, today's the last day, so I'd imagine solicitors are working late today to try and get completions done. And what you've got at the moment is 500,000 deals that completed in the first quarter, but now the market is looking like it's going to slow down. So the expectations are that we're only going to get another 500,000 deals in the next 9 months. So that's a marked slowdown from all of that happening in 3 months. What does that mean is that lenders are looking ahead. They're looking at new applications that will have happened in the last month. Those people know that they wouldn't have completed prior to stamp duty going up on April the 1st, and they're down. Those applications are down, and so lenders are looking at how can they stimulate the market and get some more business coming their way. Well, this video is about Halifax, and Halifax are looking to cut rates but also extend the time that people have. So because we've had such an influx of deals in the first quarter, things did get slower. And so there was a real burden on estate agents and solicitors and even mortgage companies just to get things sorted. They've been super busy, all condensed in that quarter. And so because of that, some people that got mortgage offers and got deals just got lost in the weeds, because I spoke to solicitors recently and they have asked if it's not urgent, if you could just let them focus on the deals that they're trying to get sorted. And that's just because I've got a good relationship with them and they can be open and honest with me. If I have an inquiry and it's urgent, they'll deal with it. If it's not so urgent, they'll still deal with it. But could I wait a little longer just so they can catch up with work that they've got? So what Halifax are saying is they are going to extend offers. And so what that means is if you've got a rate from them at the moment, and that is all rates, that's on first-time buyers, on remortgages, on product transfers, on everything, they're giving you longer in order to complete that transaction, which is good. And it's looking like it will probably be around 4 weeks additional time. So mortgage offers, I think they last about 3 months. Depends on lender and stuff like that. So these guys are saying that they're going to give you extra time. So that's good. So that gives people time to really get things sorted and complete. And they also don't want deals to fall out of bed. So what they're doing is making sure all the offers that they've got out there, that they're more likely to complete. And that could help people that didn't hit that stamp duty deadline, that have now maybe got to look at renegotiating the price or doing something in order to make that deal still stack up. Maybe they don't have that additional stamp duty. So what else are they doing? Well, they're also dropping rates. And so they're cutting mortgage rates from tomorrow on all of their products, and they're dropping them by up to 0.16%. So not a bad cut at all. That's definitely worth having for a lot of people. And they're doing that even though the swap rate, the rate that they borrow at, and even though the Bank of England has now not really got a set in stone timeline for cutting rates because of the tariff war that's going on at the moment and inflation that's rising at the moment, we've got to look at that and say, that's good. They're doing that by cutting their margins in order to get more market share. Now, this also happened last summer. So last year, we had a reversal. We had a very slow start to the year. Not many transactions happened. Then when we got to the summer, it became more likely that the Bank of England was going to cut, and lenders cut rates prior to that. They got the market moving, and in the summer of 2024, activity really did start to pick up. And that was down to people that sat out the market, that got brought in and decided to do a deal once they saw rates started to drop. Now, these cuts are happening on April the 1st, so Tuesday. And that is something that we want to keep an eye on. Now, what do we expect other lenders to do as well? Well, I think that you will start to see, now this stamp duty stuff has been, like the increase in stamp duty is happening tomorrow as well. You're going to start seeing other lenders cutting rates to get competitive. You'll always see Nationwide is one of the biggest lenders in the UK. They've got various brands. They've got the Nationwide brand. They've got the Mortgage Works brand. They've got Virgin Money brand as well. They always like to be one of the cheapest lenders. So if other lenders cut, I'm sure you're going to see Nationwide looking at doing that very shortly as well. And you'll have, and last year we saw lenders like Barclays were competitive at various times, and HSBC. These guys, knowing that there's such a small pool of potential transactions for the rest of 2025, are going to want to make sure that they get as much as that business over their competitors as they possibly can. So that could be good for everyone. So tomorrow, the stamp duty increase comes into effect, and you're going to see for first-time buyers, especially people buying in the southeast, that could increase their stamp duty costs by as much as £6,000. It's not something that anyone's looking forward to, and that is really what's going to slow down the market. So keep an eye on what's happening. What do you think is going to happen? And one more question I've got for you here. I've recorded this with an AirPod in. Some of you said the microphones that we'd used before didn't work, or then we had a long period of time without microphones. Is this sound better using the AirPod? If it is, I'll continue. If it's not, we won't. But do comment below and let me know. It's the only way I can get feedback from you guys. But also my question for you is, what do you expect to happen with mortgage rates? You've got the unpredictability of the tariffs and inflation all around the world. So that's going to make it harder for the central banks to cut. But do you think lenders are going to cut in order to get more business coming their way? What do you think? Do let me know in the comments. And do check out all the other videos as well on the channel. We've got more than 1,000 videos now. And maybe start with this video right here.